Introduction to Bitcoin's decentralized ethos. Bitcoin's decentralized ethos means it operates without a central authority, like a government or bank, managed instead by a global network of computers. This distribution of power ensures no single entity can control or manipulate the currency, offering financial freedom especially valuable in contexts like India, where centralized systems can sometimes limit access or impose sudden changes. Censorship resistance, a shield for transactions. Bitcoin's resistance to censorship means that once a transaction is confirmed on its blockchain, it's nearly impossible for anyone to block or reverse it without controlling over 50% of the network's computing power, which is impractical given its scale. This feature is crucial in India, where regulatory actions like 2021 RBI banking ban on crypto firms couldn't fully stifle Bitcoin use thanks to decentralized platform. Indian context, Bitcoin's impact and adoption. In India, with 190 million unbanked adults, Bitcoin's decentralized nature offers a way to participate in finance using just a smartphone. By March 2025, a survey by the leading crypto analytics firm reports 25 million Indians own Bitcoins, with $5 billion in annual remittance transactions, saving significant fees compared to traditional 6.2% bank charges. During events like the 2016 demonetization, Bitcoin could have provided an alternative unaffected by government policy shifts. Unexpected detail, Lightning Network's role. An interesting aspect is the Lightning Network, a layer 2 solution for Bitcoin, with 1000 nodes in India by 2025 facilitating instant low-cost transactions. This enhances Bitcoin's usability, making it practical for everyday use and further cementing its censorship resistance by reducing reliance on centralized exchanges. Now let's see the detailed analysis of Bitcoin's decentralization ethos and censorship resistance. We'll start with the Bitcoin's revolutionary framework. We will deep dive into the world of Bitcoin and its impact on our lives. Today, we are exploring two fundamental aspects of Bitcoin that set it apart from the traditional currencies: its decentralized ethos and its resistance to censorship. These aren't just buzzwords, they are the backbone of Bitcoin's revolutionary potential, especially in a country like India, which is navigating its own path in the digital age. Bitcoin, launched in 2009, operates without a central authority, managed by a global network of computers running Bitcoin software. The decentralized ethos ensures that no single entity, be it government, bank, or corporation, can control or manipulate the currency, offering financial freedom and resilience. Censorship resistance, on the other hand, means that Bitcoin's network is designed to prevent any party from blocking or restricting transactions, making it a robust tool against financial control. Understanding Bitcoin's decentralized ethos. Bitcoin's decentralized nature means it's not controlled by any central entity, unlike the Indian rupee, which is managed by the Reserve Bank of India. Instead, Bitcoin is maintained by a distributed network of nodes and miners worldwide, each holding a copy of Bitcoin blockchain, a public ledger recording every transaction. This distribution of power is facilitated by a consensus mechanism called proof of work, where miners compete to solve complex mathematical problems to validate transactions and add them to the blockchain. The first to solve the problem gets to add a new block, ensuring no single party can alter transaction history without redoing work for that block and all subsequent ones, which is practically impossible given the network size. As of March 2025, Bitcoin's network has hash rate of 200 exahashes per second, making it the largest and the most secure blockchain, according to blockchain.com data. This decentralized structure promotes financial inclusion, especially in India, where 190 million adults are unbanked, as per the World Bank 2021 estimates. by allowing them to participate using just a smartphone and internet access. Mechanics of censorship resistance. Censorship resistance in Bitcoin means that once a transaction is confirmed and added to the blockchain, it's permanent and cannot be blocked or reversed without controlling more than 50% of the network's mining power, known as 51% attack. Given Bitcoin's scale with over 81 million wallets globally by, um, uh, by March of 2025, as reported by Glassnode, such an attack is infeasible. Blockchain's open source nature, where anyone can inspect the code, ensures no backdoors or censorship mechanism are built in, building trust in the system. This resilience is crucial in contexts where financial freedom is threatened. For example, in India, the RBA's 2021 ban on banks dealing with crypto firms aimed to restrict Bitcoin use, but the decentralized network allowed trading to continue without peer-to-peer platform and decentralized exchanges, showcasing Bitcoin's ability to bypass centralized control. Bitcoin's relevance and adoption. In India, the centralized financial system dominated by the RBA and commercial banks has faced challenges like the 2016 demonetization, which withdrew 86% of cash overnight, causing widespread disruption. Bitcoin's decentralized nature could have provided an alternative, unaffected by such policy shifts, allowing individuals to store wealth or transact without relying on banks. Remittances are another area where Bitcoin shines. India received over $100 billion annually in remittances, and traditional methods cost an average of 6.2% in fees, as per the World Bank 2022 data. Bitcoin using the Lightning Network reduces this to 0.5% or less, saving a significant amount. By March of 2025, a survey by the leading crypto analytics firm estimated 25 million Indians own Bitcoin, with 5 billion in annual remittances, highlighting its growing adoption. The Lightning Network, which with 1000 nodes in India by 2025, facilitates instant low-cost transactions, enhancing usability censorship resistance by reducing reliance on centralized exchanges. Statistical insights from 2025. Let's dive into some numbers. As of March 2025, Bitcoin's global wallet count stands at 81 million, up from 19 million in 2020, according to Glassnode. In India, the number of Bitcoin users have surged to 25 million, with a total market capitalization of Bitcoin held by Indians estimated to rupees 10 lakh crore, or approximately 120 billion, based on the exchange rates. The volume of Bitcoin transactions for remittances in India has reached 5 billion annually, saving migrants and their families substantial fees compared to 6.2% charged by traditional methods. The Lightning Network, with a global capacity of $300 million and 30,000 nodes, have seen significant adoption in India, with 1,000 nodes facilitating seamless transactions. These statistics underscore Bitcoin's growing acceptance and its role in promoting financial inclusion and resilience. Some of the real-world examples and potential. Bitcoin's censorship resistance has proven vital in countries facing financial restrictions. In Venezuela, during the hyperinflation crisis in 2018, Bitcoin was used to store value and make transactions when the local currency became worthless, with trading volumes spiked 300% as per the local Bitcoin's data. Similarly, in Iran, Bitcoin mining and trading has allowed the country to circumvent economic sanctions, leveraging its decentralized nature. In India, while not facing the same extremes, Bitcoin offers a parallel financial system during times of instability. For instance, during the 2019 Jammu and Kashmir lockdown, when internet was restricted, people theoretically could have used Bitcoin through satellite internet or VPNs to make the transaction, showcasing its resilience. The potential is particularly relevant given India's history of internet shutdowns, with over 100 instances in 2023 alone, according to Software Freedom Law Center, India. Addressing concerns and counterarguments. One common concern about Bitcoin is its volatility, with annualized volatility dropping from 80% in 2018 to 40% in 2025 as per Coin Metrics data, indicating maturation. Another is the environmental impact of mining, but the increasing use of renewable energy and efficient hardware the carbon footprint is reducing. In India, with 190 gigawatts of renewable energy capacity, Bitcoin mining can be eco-friendly, aligning with sustainability goals. Critics might have argued that Bitcoin's reliance on internet access makes it vulnerable to censorship, but its decentralized network ensures that as long as there are nodes and miners operating, the system persists, making it harder to shut down than centralized financial systems. To conclude, let's see the Bitcoin's transformative potential. Bitcoin's centralized ethos and resistance to censorship are not just technical features. They represent a fundamental shift in how we think about money and financial control. For India, embracing Bitcoin can lead to greater financial freedom, inclusion, and resilience against economic uncertainties. With 25 million users and $5 billion in remittance transactions as of March 2025, Bitcoin is proving its worth. As we move forward, it's crucial for individuals, businesses, and policymakers in India to understand and embrace the benefits that Bitcoin brings, positioning India at the forefront of digital economy.